Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Hope you're having a fantastic Monday. Happy beginning of the week to you, whatever you want to call it. It's Monday, and we're going to go ahead and take a look at the market. Traditional markets are open, of course, albeit red, still open nonetheless. And what we want to look at, of course, here today is support and resistance levels. How much lower can Bitcoin go if it were to? Okay, so we'll look at that and much more. And obviously, if you are new to the channel, I'm not a financial advisor. I love teaching people to trade. I have a website where you can register to become part of my trading academy community, and of course, signals that I send out through my Discord essentially, and of course through Telegram, which is Cornix. There's a link down below, of course, for that really awesome benefit there. Make sure to check that out. But if you take a look here, we got some pretty awesome traders in the community. And granted, I don't love 125x, but it's still a thing. And obviously, whatever leverage you're using, they're making some pretty decent, change here, so to speak. And they're all using Bitget as well, which is my favorite exchange possible. So make sure you use Bitget. We have a $10,000 prize pool monthly available through my link. So if you use the link in the description below, you'll be eligible for that automatically. And it is based on profit and loss ratio, trading volume. It's pretty easy to qualify just because we don't have a significantly large group yet. So that's really nice there. And obviously, if you're in the States, you will need to use a VPN. So you will get 3 extra months free on a 12-month plan if you use my link here, of course, down below as well. So check that out, obviously, in your own time. So here's the thing with Bitcoin. Simply put, we keep attempting to bounce off of this support level here, about 16,600. That is a round number, but generally speaking, that's what we're looking at. So 16,600 is potentially a support. Now, to touch on that too, just kind of further that, you can see it was a strong resistance in the past. Okay, so that does reiterate the fact that we should have a strong support level moving forward. So the likelihood of the price going below this is, at least in the immediate future, I think is a little bit lower based on that sentiment, but a lot of other indicators are telling us otherwise. So we'll look at that as well. We'll get kind of a statistical probability of what direction it might head today, or more so this week. Again, if you're part of my community, make sure you reference the fundamentals section in our Discord. We have all the news updates coming this week. I always provide that on Sunday evenings. But generally speaking, at this point, there's nothing super significant this week, minus a few smaller things. Okay. That being said, though, either way you look at it, let's look at some of the standard stuff. So first of all, let's look at the moving averages and see where we're at. I think you know this already if you've been following my channel, or just generally speaking, we are underneath all moving averages. Okay, we're back again underneath that. That happened because of the strong rejection off the 50-day SMA a few days ago. So we had that strong push up here for CPI data, and of course the Fed meeting came up with 0.5% interest, inflation. Effectively, the price came down and hadn't stopped since then. Obviously, over the weekend we saw some sideways action. That's pretty standard. But now it is Monday, and traditional markets are open, and we're seeing a little bit about 1% correction from Nasdaq, so that's still continuing lower. And then, of course, Bitcoin is also, I wouldn't say it's continuing lower, but it's definitely dropped. Any gains that came through the weekend is gone now. Okay, and that's normal stuff. That's standard. Okay, so nothing super surprising there. Again, we're retesting the support level at 16.6. We take a look at the MACD here, we are officially diverging. Now, this doesn't imply that you're going to just see something along these lines because you're diverging. It doesn't always happen, but it is a possibility. So I would say expect further downside, just in the general sense, based on the sentiment here alone. That's not the only thing you want to base your trading on, of course, but MACD divergences and convergences are things you kind of want to look at on larger time frames and see generally what they are telling you. If we look at the actual, daily here and the RSI, we're still under 70 and 50 in the RSI, so we're not necessarily bullish by any stretch. We had, again, this little 2-day indication of a bullish breakthrough, but that was CPI data and some fundamental catalysts pushing the price action up, and immediately got rejected off a key level resistance. So generally speaking here, we're not in bad shape, but it could be better. Okay, so the daily doesn't look fantastic, but it's kind of giving us some warning signs we might see further downside. So if I were to take an entry, to say for example, I would take entry perhaps where the price is at right now, just as an example, and then of course I would set my next entry target. I'd have multiple entry targets at maybe just say 16,200 and perhaps even 15,005. But I think that's a stretch. I don't think we'll see 15.5 immediately. I do think perhaps next year we could, just based on the overall sense of the way things are going. There's a decent chance we could see that, but again, it's hard to say just yet. It's all pure speculation. But for the moment, I do think if we do see further downside, 16,200 would be a decent entry target, or perhaps something worth waiting for, something along those lines. again, these Fibonacci retracement levels are proving to be very consistent. I mean, you can see just how often the price action stays in these zones and then essentially breaks through and continues on to the next, right? So there's a lot of consistency in these areas here where the price gets effectively range bound in each one of these ranges. So that gives me a little reassurance that if 16.6 is the bottom, then we should see the most immediate high at 16.9. So if you have some profit targets in place and you just take a long position, you'd want to consider taking profits before the next Fibonacci retracement level there of 0.5, which is 16,900 and some change. Okay, so maybe 16,850 or 16,800 might be a good entry. Something along those lines. Again, that's just how I like to structure my trades. You don't have to, but in this environment, the market is not giving us a tremendous amount of opportunities. Yes, there's outliers here based on fundamental catalysts, but for the most part, it's typically range bound, right? So if you work within each range that you're given, you're going to be a lot more successful. You get in and get out before it's too late. That's essentially the concept. Taking a look at the 4 hour though, you can see kind of a bit of a bounce off of 30 on the RSI. I kind of mentioned that on Friday that we'd probably expect that throughout the weekend. It was not a big bounce at all. It went from 16.6 to 16.850 as a top. So a $250 range for a weekend. It's not a lot for Bitcoin. But nonetheless, it happened. And if we take a look here at the MACD, we can see we're still kind of converging. But again, the momentum is starting to dissipate a little bit with this most recent candle here, this red candle. So that really just tells us here that we have momentum to the upside. The likelihood of further downside is less probable. But if we continue to go sideways all week, there is definitely a chance for a leg down. We got to recognize that. That's potential there. So again, slightly more further downside, at least for the 4 hour, kind of telling us that we have potential for that as well. But it's kind of equaling itself out based on the overall sense here that we are tentatively at the bottom. When you're close to 30 on the RSI and the 4 hour, the likelihood of it going lower is lower. We recently converged on the MACD, albeit a weekend convergence. Nonetheless, it's still potentially beneficial. So we could be seeing the start of a double bottom here. Again, I know slight bit of a stretch, especially when you include the weekend, but generally speaking, that's what we're looking at. Looking at the 1 hour, we can go ahead and see with TD sequential correction, Ichimoku cloud first, that we are still stuck below the cloud. So until we have that confirmation above the cloud, a closure preferably at 16.8 or higher, then there's really no reason to want to take a long position unless you have multiple targets. And when I say unless you have multiple targets, what I'm meaning by that is if you take an entry now, don't just go all in right now. Use a small position size, use small leverage, and essentially add to your position as it goes lower if you have to. To me, 16,600 I feel should hold. It was a pretty good little indication that we're not going to go any lower. But again, traditional markets drop really hard near the end of today's closing day or open low. They have a gap down with pre-market hours tomorrow. We could very well see further downside. And again, the next Fibonacci retracement level is 16,150. So just round number 16,200. So 16.6 and 16.2 seem like good entry targets to me if you're going to consider doing something along those lines. Again, not everyone does that, and that's perfectly fine. I would also recommend, of course, to make sure that you wait for confirmation. So, waiting for confirmation is to get above the cloud effectively. With us being range bound throughout the weekend, there's not a lot of good signals here from the cloud because again, conversion line and the baseline, they're constantly above and below each other, right? So when that happens, there's no real true signal. And of course, the lagging span is going to be barely free and clear of price action, but it's going to keep doing one of these as the price goes up and down. So again, range bound activity, the cloud is not necessarily the most effective, but it is helpful to understand with the moving averages essentially that we are still below the cloud at this point, and that is more so bearish or just giving us an indication there's somewhat of a resistance at 16,700. Okay, that's what we're looking at here. All right, so there's that, and then of course TD sequential we can look. Not a lot to disseminate here as well. Again, weekends are kind of funny, especially the weekends that are very uneventful. We had low volume comparatively throughout the weekend, compared to last week, of course. So generally speaking, low volume. Not a lot of potential benefit here, if you will, or anything to indicate that the price is going to go up or down based on overextension. So we're not overextended by any stretch, but we are roughly 6 hours into this continuation of the downside. So further upside would make sense, okay? Again, a small consolation, but definitely not a reason to take a trade. So again, if you take everything together here, it's kind of a wash in a way. But to me, when you have something along those lines, where all the indicators are telling you that it's kind of plus or minus and fairly equal, the thing I like to rely on is Fibonacci retracement levels and or trend lines. We don't necessarily have a strong trend line. We broke the trend line to the upside down. but we did recently break this recent descending trend to the upside. You can see it a little easier and more clear on the 4-hour, where obviously we broke below here, price goes down. Price comes down, broke through there over the weekend. Again, weekends are not the best indication, but generally speaking, it is giving us the indication that we're no longer moving straight down, we're moving sideways. Okay, so again, those little things, if you kind of factor that in, plus us being range bound and a new, support level here, or potentially, previous support level at 16.2, that should effectively hold if the price does lose 16.6. All right, again, multiple entry targets, probably the way to go in something like this here. Because again, heaven forbid the price action goes up and you get filled, you'll still take 50% of your profit because you put 50% in. You leave the other half for that other target. That could very well happen. Okay, so again, when there's shadows of doubts, I like to have multiple targets to ensure that we get filled at specific levels, just in case it comes back down. All right, so that's kind of where we're at there. I don't know if you were able to read through the lines there, but take a trade if you want. Just be careful with multiple entry targets would be the recommendation. And then, secondary to that, maybe just wait for confirmation if you're going to take a long position with one entry and you're using potentially a larger position size. Do not recommend that, of course, unless you're an experienced trader. I personally like to use small position sizes and smaller leverage, depending on the overall size of my portfolio, to ensure that if the price turns itself around, I'm still in good shape. Okay. Again, a lot of different schools of thought. I hope that makes sense for you. Thank you so much for joining me here. Hope you have a fantastic rest of your day. Again, look forward to working with you if you want to become a Crypto Cash member. Oh, one last thing too, of course, be sure to register before year end, just based on the fact that you can lock in your rate, because next year rates are changing. So if you're currently a member, just know you're going to be grandfathered in. You'll have all the benefits at the same price point you're at. All right. Thanks again for being you. Appreciate you. We'll see you in the next one. Take care.